So to wrap up the valuation section, we're going to focus on risks, a very important piece when you're investing in any assets. We'll focus on three different areas for Ethereum specifically: the market risks, the asset risks, and the coin risks. This is how I would value any cryptocurrencies. So market risks are in all investments. Crypto is no exception, being a 24/7 market. It's always trading. Bitcoin and Ethereum have been volatile since day one, so you should always be aware of this. There's a level of utility, there's a level of speculation. Even with the most decentralized network, there's concentration risk. So even if the level of miners, nodes, and validators are concentrated among one network or on one server, or they're all using the same cloud computing software like an Amazon AWS or something, there's a level of concentration you need to be aware of when you're looking at different cryptos, because they're using computing power at the end of the day. And this is always changing, and it's important to just note that how much concentration there is, will it change the market, how will it affect the price? And then again, regulations. This is the case for the entire crypto economy. Regulations are coming. The government can be negative, which may reduce demand or change the level of activity on chain for any of the coins. Asset risks. Now, encryption risk is the biggest risk that anybody should be fearful of. This is an attack vector when you think about it. How will someone either break a security protocol, divert your assets into their own account, and then it's immutable, so you can't reverse these transactions. If it's small, it's a big problem. If it's a big transaction, then maybe the network will make a decision to fork. But encryption risk is real. Obviously, even regular companies have this threat when they're being attacked. So cybersecurity is a big threat to any business or any asset class or any asset to begin with. And loss of funds on a network, can result in a run on the bank. It should be noted that Ethereum's encryption risk is slightly lower than a Bitcoin's because they've been using newer technology to encrypt. But in the future, we'll probably see another protocol that has more security or better security. So that's a trade-off, and obviously there's competition in the marketplace as well. The next asset risk is software risks. Remember, all these crypto are based on software, so computer software. So bugs are a feature in some software, and they're unique to different coins. So you definitely don't know what will happen on different coins if you're not aware of how the software is being developed, whether it's concentrated, whether it's behind the scenes, it's not open source, it's not transparent. Ethereum is transparent, but the drawbacks are that the code is constantly changing, hence the upgrades and the mergers. It's more complicated than Bitcoin, so there's a level of sophistication that you do need to know to understand and do due diligence. And then the merge is a big software upgrade, so things can go wrong, and that's a downside with anything in software and technology that you have to be aware of. And then coin-specific risks, I think you need to be aware of as well to understand on-chain threats. So, if something loses market share, activity, transaction fees, or something goes wrong, it's important to understand where consumers are focusing their attention, where they're spending their money, and then most important, because this is transparent, you can see how developers are spending their time. What features do they value? Is it speed, security, or something else? And right now, Ethereum has the most number of developers, but that can change in the future for some odd reason, and that's something to look at for other cryptocurrencies as well. Another one for coin-specific risks is scalability. We talked about this for Ethereum. Decentralized networks need to keep a large amount of data at a low cost. Otherwise, transaction costs will rise. Ethereum is solving for this. So it's important to figure out whether people are working towards a solution or they're creating more problems. And then high transaction fees can make it expensive to use Ethereum for small value transactions. So they're creating layer 2 protocols that will solve for the scalability issues, but what will happen is it'll move away activity from layer 1, which is Ethereum, and these layer 2 applications will be distinct and unique in themselves, and see less activity on the main chain and more activity happening on the side chains. So to wrap up the valuations, this is how I would begin. any investment thesis in the crypto space, I start with the white paper. I'd read it thoroughly, read it once, twice, 3 times, as much as you need to get comfortable. I would go online, look at their website, track the activity on chain. Are the developers using it? Who are the investors? What's the level of concentration risk? Are customers actually using the token or coin in this case, or their applications? And then I would go to number 3 to test the use cases, to get familiar with the applications on chain. Everything is open source. If it's not, you need to understand why it's not open source. And then once you understand all the risks from the market to the asset, to the coin specific risks, and you're comfortable, I would open up a crypto wallet, preferably cold storage, and then make your first investment when you're ready. But remember, this entire course is just really educational for you to learn the process. None of it was investment advice, so I always recommend doing your own due diligence, do your own research. I provided some resources so you can figure out where to go, what to look for, and how to value these assets. And always remember that the essence of blockchains is to own your asset at the end of the day. So if you don't own your keys, you don't have a cold storage unit or a cold storage wallet, then you don't own your crypto. And it's an important distinction when it comes to the crypto economy, to own your assets, own your keys.